Richard Clarida is with us with Pimco of Columbia University, always the vice chairman, former vice chairman, I should say, of the Federal Reserve System. And I think, we're going to straddle here between Bloomberg Money and everything else.
Yeah, and we got to start with what we saw in the bond market this week, because we had a sell-off, and the 30-year yield this week reached a 19-year high, 5.26%. Rich Clarida, does the sell-off in the long bond tell us anything about the U.S. economy and therefore how people's prospects might change?
Well, there are a lot of reasons bond yields can go up and down, not just the Fed. The Fed's an important part of it. What I would point to is that so far, Kevin Warsh has been chair really only 6-7 weeks, but an important measure in the bond market, which is break-even inflation, so sort of traders' expectation of inflation is at or below where it was at least out to 10 years when he became chairman. But certainly the reaction during the press conference was probably not one that was welcome.
Right. We know the first Trump administration cared a lot about the stock market. And the second one seems to have added the bond market to its list of things that it's watching. Which part of the bond market does this administration care most about? The 30-year yield, the 10-year yield?
Oh, my goodness. I'm not sure. I would defer probably to Secretary Bessent. I do think at one point he may have said that he's focused more on the 10-year yield than he is on the Fed funds rate. Well, so much of the economy, people borrow long for car loans or mortgages or corporate loans. And so that's probably what he had in mind.
Okay, so what we're going to do here, it's Bloomberg Money. We do personal finance, we do wealth management, we do retirement, but we also have Richard Clarida with us, who's in the heart of this debate over the chairman of the Fed. So it's going to be a little bit sort of like Scarfu and Tom doing Bloomberg surveillance, like more, you can protect the children at home.
The lines are blurry.
Yeah, protect the children at home.
Surveillance Friday.
Okay, so former vice chairman, with great respect, I don't want to turn this into a history lesson, but you have Warsh, nominally of Stanford, talking about the Lucas critique, and then going over, and what people don't know is you're directly involved with this. Let's first listen to Chairman Warsh on Wednesday.
Some version of the Lucas critique should remind us that when we talk about measures of inflation or something else, and we describe those measures as being consistent with our objectives, we might make them such that they're not very good measures or very good objectives.
The chairman, before he had the questions from Michael McKee of Bloomberg, the world lit up. Anna Wong, with legit cred out of Lucas's Chicago, was fiery. The news conference was rich in philosophy, process, and institutional aspirations, but poor in operational guidance. The absence of Clarida-like analytical specificity appears to have spoken louder than Warsh's words. So Lucas did what he did. CGG, Clarida, Ghali, and Gertner reinvented modern economics with something called dynamic stochastic general equilibrium theory. We come out now, and as Claudia Sam says, we have a chairman who's not sure what he's looking at in inflation. How does he get the rails back on? Does he need to reaffirm PCE is the inflation series?
Well, I think what he said at the press conference is for now until next January at least. That's going to be
correct.
The Fed adopted that again in January. He left open the possibility that the task forces could recommend other measures. They could go to an average. Instead of picking one index, they could look at CPI, PPI. There are a lot of things they could do. But I think Anna, as usual, raises an important point, is that an inflation targeting central bank needs to be clear about what it is it's targeting. It can and may evolve. And so I think that will be important.
Very, very importantly then here, if we need to get the system back with a confidence about the Fed, how does he do that at Jackson Hole? Does he have to reaffirm, as Sam says, that inflation is the appropriate measurement and not a policy?
Well, I think Jackson Hole may serve a couple of purposes. Historically, as we've seen, chairs have used Jackson Hole as sort of a sneak preview of coming attractions at the September, November, and December meetings. Chairman Warsh hinted he may do that. He's also interested in what he called some big picture questions that he sort of previewed at this meeting. And he's also talking to the task forces. So I think it's too early to tell what he'll do at Jackson Hole, but he may do that as well.
I find it really interesting that he doesn't want to tell the bond market a whole lot of things, and he's kind of waiting to take his cue from the bond market. From a layperson's point of view, it feels very circular, right? The central bank sets a benchmark interest rate, the bond market takes its cue from that. What's the rationale for the Fed to take its cue from the bond market that's relying on the Fed to set policy? Help me understand that.
So here's the way I would express it. The Fed is a very important part of 10-year Treasury yield. It's not the only thing that drives yield. So I think the chairman was important to emphasize that the Fed does want to step back and interpret movements in bond yields. It could be inflation, it could be global growth, Middle East hostilities. But certainly the chairman and the Fed understands that an important part of 10-year yields is the expected path of the funds rate. And to Scarlett's point, and Ben Bernanke gave a speech on this, as did I as vice chair. It's sometimes called the Hall of Mirrors problem in central banking, which is the central bank looks at the market looks at the central bank, it can get circular.
Let's go back to your paper.
Yeah.
Galley and Gertler didn't know this. Richard Clarida channeling Alan Blinder. Having looked at monetary policy from Joni Mitchell's Both Sides Now, I can testify that central banking in practice is as much an art as a science. How does Warsh get back to science, to Clarida's silence, versus some mom and pop philosophy he learned at Stanford?
Oh, well, I think Kevin Warsh and the committee understand that. Look, Chairman Warsh came in with an ambitious agenda. And I think that they're going to both focus on implementing that agenda as well as getting to where they need to be on policy. I guess where I would try to relate Clarida Galley-Gertler to the current conversation is perhaps specifically in the domain of forward guidance. And so in the CGG model, there's actually not a role for forward guidance because the market understands the Fed's reaction function and the Fed understands the market. If you're not going to do forward guidance, then it's incumbent for the markets to have a broad understanding of how the central bank will react to data. If we had 6 bad months in a row of inflation data, would they hike and by how much? They're not committing to that, but they're saying if the data comes out this way.
For everybody on Bloomberg Money and Scarlet, I got goosebumps. This is like the real deal. I mean, this is what the adults in the room are arguing about right now.
Well, for people who are watching this and don't quite know all the names that you and Rich are throwing out there, I want to bring it back to the real economy and to real people's concerns. Do you agree with those people who say that we have a K-shaped economy where the higher income and asset owners are doing well and everyone else is kind of struggling, that downward arm? And if so, how do we solve for that?
Well, yes, broadly, we do and have had a K-shaped economy for some time, but the branches of the K have been diverging more widely in the last 6 or 7 years. The way I like to think about it, Scarlet, is roughly 60% of Americans live in a house that's owner-occupied housing, sometimes with their parents, but it's owned. About 40% rent. Most of that 60% owns stocks. Most of the other 40% doesn't. So we've been in an economy for some time, but especially in the last 6 years, when stocks have gone up, house prices have gone up. So the top of that K is doing pretty well. If you're in the other part of the K, you don't own your house, you don't own a lot of stocks, you're living paycheck to paycheck, it's been a tough 6 years. And so there's no doubt we're in a K-shaped economy.
Yeah, those services costs just keep getting more expensive as well.
Yeah.
Bloomberg Money is about how you invest and make your money, but it's also about how you spend your money. So, Rich Clarida, I want to ask you on this Friday, what's your splurge, first of all, and how do you save? What do you save?
Well, I leave the saving to my wife. She's pretty good at it. My splurge is, my hobby is music. So I buy guitars, I buy recording equipment.
Really?
I spend money on recording my albums. So yeah, that's my splurge.
Didn't you record an album in 2016?
I did. Available Spotify, Apple Music, stream for free on YouTube. The new album's coming out later this year. Maybe we'll do a rollout party on this show.
Oh, it's a follow-up?
Yeah.
Oh, what's it called?
It's going to be called Take Two.
Take Two, okay. And what, folk music? Like, what's your vibe?
Folk rock, yeah.
Folk rock.
Someone who listened to too many Beatles albums. And
I will editorialize as I have heard it. It is not a vanity album. It is exquisite. I was shocked.
Well, thank you.
Really, really quite.
Thank you.
Quite good.
And you're the solo star. Like, I don't hear a band name in there.
Well, you're a band.
So I write the songs and do the vocals, but I work with professional studio musicians in London, LA, and Nashville. So all the music you hear is really good playing, and then I do some singing on it.
All right, Richard Clarida's new album coming out. What day?
Well, by December 31st.
By December 31st. Richard Clarida, thank you so much.